professional ethics, engagement procedure, and small firm measures. Professional ethics. I think that's the foundation of our practice. Ethics. That's a foundation. Dictionary definition of ethics is to be ethical. According to Webster Dictionary, one has to conform with the standard of conduct of a given profession or group. Therefore, a task professional must comply with the legal requirements, code of conduct, rules and regulations of the institutes. Where there's no code of conduct, no standard, that organization or group wallows in confusion. So for us as CITN, we must conform with our standard of practice. We have 3 documents that guide our tax practice. One is the tax law. You cannot do without that. Second is our professional rules and practice guidelines. Professional rules and practice guidelines. And finally is the taxation standards. These are the 3 documents that guide our tax practice. When we talk about ethics, what's the foundation of ethics? The fundamental principles of ethics are 1, integrity. The president and the chairman of Taxation Standard spoke about integrity. You must be a professional with integrity. Granted, there's money in taxation, but you must be a professional with integrity. Don't pursue the thousands of naira and lose your integrity. Once your integrity is gone, you're no longer a practitioner. You must be a man with integrity, or a professional with integrity. Objectivity, how to be objective. Your client should rely on you. Okay? Don't be a man of subjectivity. You are neither here nor there. Professional competence. You must be up your game at all times. Don't say, well, the money is good. The job you cannot do, you will sign it off. I want to do it. 2 years ago, a company engaged my firm and another firm to do a forensic audit. We're divided into 2. We handled the south. The other company was handling the north. The assignment was to run for 3 months. We finished ours within record time, 3 months. Actually, the second firm was a very small firm and hadn't the experience. However, because the money was good and I think he was close with the MD, and he got the assignment. The assignment was to run for 3 months. 1 year, they could not find their redeems. They were still doing the job. We had collected our money and we had forgotten about the exercise. Until early this year, the MD called us that, well, these people could not still finish the exercise for the past 2 years, that we should come and do what they were engaged to do. We had to do it, and they were asked to refund the 70% paid to them. So what I'm trying to say in effect is, please don't sign off what you cannot do. 1. And secondly, too, as we go further, there's provision for merger. Talk to a colleague. Seek professional advice. If you cannot merge, if you subcontract, you are still liable to your report, but there's nothing bad to engage a colleague who can do it. Please, let's join together and bid for this assignment. From there to you learn. Okay? So please don't engage or sign off what you cannot do. Confidentiality. Yeah, my chairman talked about that confidentiality. Or other chairman and both the president spoke about it. Look at your client's money and take your own fee only. You exercise. Do your work and forget it. And don't use your client's information for another client. Okay, don't divulge your client's information to third parties. More often than not, you may even sign off a confidentiality clause. So please, confidentiality is very, very important. Compliance with the law. Taxation is law, no doubt about that. So make sure you comply with the relevant tax provisions. Independence. Be professionally independent when dealing with your clients. Yeah, practice governance. Structure of business. Well, majority of us have multidisciplinary businesses. We have the audit arm, that I know. We have secretarial arm. We're into tax practice. We have law, you know. I have some firms that have a law too. Make sure these departments are separated. Don't mix your tax with your law practice and the files of your audit. Okay? So make sure they are distinct and separate. Existence of business name and letterhead. As practitioners, I'm addressing you because you are becoming a practitioner. All you've been doing before, we were doing it illegally. I know you've been practicing taxation before. You were doing it illegally. Before now, or even now, until much later, you were those regarded as quacks. No doubt about that. That is simple truth. When you practice without license, you're a quack. Okay, so after today, you start practicing legally. So to practice, you need to have a firm. You have the business name, which was duly registered anyway. And the institute too, need to register your business name. Register your business name. The name of your practice is very, very important. You can hardly see big firms now having their names like Agbetuyi and Co. The president said, there's places you can go, you may not get a job. So practice is no longer in vogue. That is simple truth. So practice, we have a lot to do. Now, tax reform is there. Okay, some of us are both audit and tax practitioners. How can you combine both? It's very difficult alone. It's very difficult. In my firm, we have, even the audit is divided into departments, okay? We have those in charge of manufacturing, those in charge of trading, those in charge of oil and gas. Even that is even divided into sections too. For tax is a different department entirely. Okay? There's no way you can do it alone. If you don't chop alone, no, if you chop alone, you know what happened. It's dying alone. Okay? So, yes, use of practice license and seal. Yeah, the institute has introduced seal and stamp. We sell seal and stamp here at the institute. The idea is that all our correspondents, let's know the actual tax practitioners. With this, before even up to now, if you send anything to the FRS, LRS, your letter will be naked, kind of. No seal, no stamp. When the tax authority starts enforcing it, they will not receive any correspondence from you because you're not a genuine tax practitioner. But when you append your stamp and seal on your documents, going to the tax authorities, they know, yes, this is genuine tax practitioner. And don't forget too, that your stamps are personalized. You can't use my stamp. My stamp bears my name. I'm not my number. So that person, let's know who is doing what. There was one time an audited financial statement was stamped and sealed with CITN stamp. Yes, it has happened. It's not a story. It had happened. I saw it. Audited financial statement. No audit now. You know our opinion page. It was stamped and sealed with CITN stamp. Invariably, the guy didn't know the difference between CITN and ICANN. the person who did it faced the CITN disciplinary committee together with ICANN. The ICOM, I didn't know the ICOM, but I know he faced that committee. So please, let us know our onions. If you knew the difference between both, how can you use CITN stamp and use it on detailed financial statements? So that's why lectures like this are very, very important. You know your left from the right. Yeah, practitioner, you're a practitioner. Okay? Oh, know your client. I will talk to my chairman. We should try to, this is our newly licensed practitioners. They should be groomed on the foundation. They've been practicing legally. For them to practice legally, we should give them time for them to be well groomed. Okay? Know your client. For you to commence an assignment, so you don't run into troubles, you have to carry out a due diligence about your new engagement. Who's your new client? What does it do? What is the source of the income? We were engaged by one company one time, and he came, we said, yeah, I've not started business. You know, I just came into Nigeria and all that. And he needed tax clearance certificate. He had no commence business. Then it was not automated like this that, you know, with touch of button, you see the profile of the company and all that. So we said, okay, you need tax clearance certificate. We carry out due diligence. Do you know when to FRS? They open, then they use K-card. For those in FRS, you know what K-card is. They opened the company's K-card and saw that they had withholding tax credit. And the MD said they have no commenced business. And when I came back, I called the MD. I said, well, you say, yeah, no business, nothing. A couple have not sold. I brought the printed document from FRS. This credit of withholding tax, how did it come? He said, you know, that was a red flag. Red flag. That was the end of our engagement. But that was a very high-risk client. So please carry out a due diligence about. Don't forget about the money. You may want to take millions of naira and rubbish your certificate, high-end certificate and integrity. Don't forget, we are men of integrity. Our profession is a profession of integrity. Trust. Okay? So when that trust is breached, you are gone. Yeah, another very important thing is engagement letter. Engagement letter is like your agreement. Forget the appointment letter. It's immaterial. Engagement letter will tell both you and your client what you agreed, your terms of agreement. What are you going to do? What does the job cover? Are you going to do only audit? Is it audit or and taxation? What is the fee? What is the level of confidentiality? Who is the owner of the working paper? So all this has to be stated in your engagement letter. Engagement letter is very, very important in our practice. Else it become your word against mine. Though engagement letter could be very lengthy at times, I think ours is about 7 pages. Okay, but what we have done later was to design a summary kind of 1 or 2 pages. Okay, engagement letter is for you design it, you sign, the client will sign and give it back to you. Okay, so we sent to the client signed and sent it back to us. Much later, after the audit, we sent a bill for tax. Okay, he said, okay, give the draft to a tax consultant to give us a tax computation. He said, no, it's the same thing now. What is the same thing? If you had auditor, you have to do the tax. We say, no, that's not correct. We are not a tax consultant. We're appointed as your auditor. Meanwhile, look at our engagement letter. Because engagement letter, we stated it that this is only audit. Any other service, either taxation, consultancy, is a different terms. I will have to discuss that. He said, no, that's not correct. We will say everything is both tax and audit. We say no. Okay, look at it. He said, get me letter. It's about 7 pages. How could I have read it? Okay, no problems. We have a summary. Brought summary. I said, okay, that is true. I signed this. It's a different engagement. So please, anything not documented, it's not done. It's arguable. Make sure your discussion with your clients are documented. Engagement letter is very, very important. I always tell my partners, when you go for a meeting, no matter how short the meeting is, let it be documented. Let's have minutes of that meeting. Send to the client. They sign, you sign. To avoid argument tomorrow. We are very smart people, but let's try to do what is right. Yes, requesting information from existing practitioner. Yeah, good. If you are succeeding a tax practitioner, tell your client you want to seek the outgone practitioner's consent. There may be instances where the tax practitioner may have been asked to go because he refused to compromise. Very, very possible. And the client may feel that outgone tax consultant may reveal what happened between both of them and deny you to consult with outgone tax professional. If your client denies you from consulting with outgoing practitioner, please be careful. That's another red flag. Be very, very careful. Because the man may have been removed because of he refused to compromise. We have been removed, because we refused to compromise. Okay? The company wanted us to prepare 2 financial statements. One actual, and second for the tax authority. I will tell the client it is impossible. We've been in business for over 55 years. Don't ask me how old I am. We'll be in practice for 55 years. How can we prepare 2 financial statements? It's impossible. How do people do it? Well, we cannot do it. If you cannot do it, consider your job gone. So be it. The job left, and who cares? One job goes, a better one comes. Okay? So, when request for information, coincidentally, unfortunately, really, the new auditor did not even write us to find out if there was any professional reason why they should not accept the audit. You see, we have practitioners. Ideally, that was a recommendation by EFAC. Move together with ICANN. For you to succeed, if you succeed in that firm, you have to seek clearance from the outgone auditor. If there's any professional reason why you should not accept that assignment. But they didn't get back to us, and that was it. So that will tell you the kind of firm that took the job from us. I know if it was Big Four, it was not possible. They can't even commence assignment without reaching the outgone auditor. Obligations in respect of advice. The president spoke a while ago while he was in the US. They were asking questions about the reform bill. They look at us as professionals and experts. They expect us to be all-knowing. I'm just being fair with you. You are a chartered tax practitioner. They will ask you questions anytime. So please, if you were asked some technical questions you're not too sure of, I do tell my partners, tell them you get back to them instead of giving a wrong advice. It's not a shame. You are not God now. I'll get back to you. Go and ask questions, do more research, and get back to the client. And don't forget, there are some advices that are routine kind of nature. You can do that verbally if it's not too technical. But others, you must document them. You will say, this man, that's what you told me. And if it's not documented, how can you deny it? And some too are hybrid, both verbal and documentation. So please, your advices must be documented. There should be proper record keeping. Please, your file should speak for you. Your file should speak for you. You don't need to be there. Your file should speak for you. Every assignment should be documented. For example, what my chairman is doing now, Dr. Ruth Rokoye, is visiting your practice firms. Okay, you become practitioner from today anyway, to see if you are doing the right thing. If you are doing what I'm saying now. It may be too new to be visited, but we are visiting firms. So when we visit, even if the practitioner is not there, the file will speak for itself. For most of us, we always have exodus of our staff. They come, they go. But someone else will pick the file and be able to talk to the file. So please, your file should be well documented and rich. Managing conflicts, acting for both parties in a transaction, financial involvement with client, yes. Acting for both parties in a transaction, that is very important. That is conflict of interest. There's one big company like that in Lagos, very big company. The owner established the company. If I call the name of the company, you know the company. Very, 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 very big company. It was big company, really. The owner, he was the MD. And when he established the company, he had 60% and the wife 40%. That is shareholding. Regrettably, I'm saying this, I want to say it for all of us because we are all CEOs. I have to say this as a word of caution. The MD had a secretary, and before you know it, I start seeing the secretary in some very important meetings. Unfortunately, the secretary became the wife, and he had to divorce the wife of 30 years. What brought this was that we were consulted to value the company. Because divorce, they're no longer together. So they have to share the company now. The wife will take 40% of the value, while the man takes 60%, being the structure. They had two lawyers, both ends, and we were consulted to value the company. Good money. And one of the lawyers wrote, have you ever worked for this company to avoid conflict of interest? Conflict of interest. Have you ever worked for this company? Conflict of interest. And I was not too sure. Neither of our partners were sure. But so let's dig into the record. We discovered that we had one time advised them about payee matter, very minor payee matter. We didn't hide the information. We told the company that yes, we did. However, in a casual capacity, not really task consultant, we're not task consultant, but just a one-off assignment we did. They wrote back to us, well, sorry, for conflict of interest, you cannot act in your capacity as consultant to value the company. Painful as it was, because we knew that we were looking at big money, but be that as it may, as firm of integrity, we didn't mind what the money was. And a month later, the lawyer who wrote to us introduced us to another good job. This time around, not consultancy that's one-off, but other job that was, a continuous thing. So don't be afraid to let go any job that will be toxic or that will run down your integrity or run down your name. When a road closes, a better one opens. Okay, that's the major of managing conflicts. Financial involvement with clients. When, by mistake, a client keeps money with you, please open a different account for that particular money. Don't get immersed. Money is very tempting. If you chop your client's money, I don't know. Okay, your name will be dragged in the mud. Yeah, basis of charge or fee, charging for service. Some of us are very, very sheepish when it comes to charge fees. We charge ridiculous fee. At times 250,000. For what now? 500,000. Over what? Over what? Don't be scared to charge fee. Don't forget too, if you've seen the Institute's hourly charge out rate, I mean, we are not cheap. So I will refer you to the Institute's. We have scale of fee. Okay? You can use that to bill your clients. Don't be scared. Yes, we had a client had invited a bid from some consultants, a one bank assignment. We quoted I think $15,000 or $20,000, and that firm quoted $3,000. The agency said, "Well, this guy doesn't know what he's doing. He doesn't know the most of the job. So more often than not, the least may not get the job." Talks about, I mean, do you know what you are supposed to do? So don't be too ridiculous. I know the Big Four one time, they said they had, whether it's still maintained, I don't know, they had benchmark the least fee they can take from their clients. Anything less than that, forget it. Give it to a medium size. Let them grow too. Fee dispute. I am always comfortable if we lost a client on account of fee. Our fee is too high. No problem. That's our word. But I'll be mad because, like I did say, we have a partner that manages different clients. Okay? I will be mad at a partner that loses his client on account of negligence. On account of negligence. Do your best. Give our clients the best. If they see your fee is too big, so be it. We are not cheap. Okay. Complaints to the firm. If there are issues, who is responsible? Who will the client report to? It's you, the managing partner. Yeah, you're the chief security officer in the real sense of it. Not some governors that are chief security officers that cannot even give a directive to ordinary commissioner in their states. You are chief security officer of the firm as the head. If any of you have been visited by Financial Reporting Council, the first question is that, who takes responsibility for the quality control of the firm? It's the managing partner, whether you like it or not. So whatever is signed out, you are responsible for it. Okay? So the complaint must come to your desk. But if God help you, the client didn't bother to complain to the firm and goes to the CITN, president have said it, he had no hand. It goes to the disciplinary committee for you to be heard. Yeah, recruitment policy. How do you get your staff? You must have that policy of how you get your staff. Is it through newspaper publication? Is it one-on-one? But you must recruit the best. You must recruit the best. We have yardstick for engaging trainees that we cannot deviate from it. Okay, even our retired partners do know that they can't send somebody to us. Please go and meet Mr. Bogo for employment. When the person, he knows that, in fact, before, first you meet the entry qualification of 2-1, and secondly, you must go through our tests, aptitude tests, and interview. It's only when you pass that you can be recruited. Please don't recruit based on, one-on-one. I know you, you know me, and all that. I don't think you have the best of it. One of the things Nigeria is suffering now is political patronage. Whether you are good or not, put the round square in the square hole because of patronage and sentiment. You don't run business in sentiment. You don't run business in sentiment, or your business will die sentimentally. Yeah. Performance evaluation, yes. Evaluate your staff objectively. In our evaluation form, we always have a covering letter. Please don't use your relationship with the staff in the past months to assess him. You know, a staff may have offended you maybe last week. You say, oh, you guy offended me. You mark the person down. No. Evaluate all the staff objectively. And anybody that performed very woefully, what to do, we call the staff for a meeting and discuss with the staff. What happened? Okay, so evaluation should not be a secret document. Yes, training. Please give your staff adequate training. You either train them or you do the work alone. You see yourself doing the work, all the work. And if they perform woefully on the field, the onus is on you who signed the documents. Train your staff very well. Forget that they will leave. They will certainly leave. They will certainly leave. There was 1 year we lost 5 of our qualified staff to the Big Four. And when I saw one of the partners, we were just gisting. I said, oh boy, what's happened now? 4 or 5 of our staff say, hey, that she was not even aware. The same thing they're suffering too. She will confirm. That's how they keep jackpotting. So all of us are suffering it. So don't say because they will leave, you will not train. Please train them or you will run yourself into a very, very big trouble. And encourage your staff and management too to attend our MPTP. I know, you see, there's no knowledge that's a waste. There's no knowledge that's a waste. No matter how it is, you will pick one thing and learn from it. Measure. I think I talked briefly about this before. Please, you cannot do it alone. Try to talk to a colleague and merge your businesses together. And when you do that, you see, to come together really as partnership is not easy, but all the same, look for somebody with like minds. And with proper documentation, you have a very good marriage. Succession plan. Well, you have your business. What's your plan for the business to outgrow you? That's very important. What's the plan of the business to outgrow you? To overlive you, for you to live and business keep flourishing. Like I did say, I work for Balogu Badejo & Co. The founder of the firm, Balogu, died so many years back. Badejo had long retired. Because we have a very good succession plan, that's why the firm is still in existence today. Because we have a very good succession plan, that's why some of us are partners today. Because we have a very good succession plan, that's why I'm the managing partner. And when I retire tomorrow, we know who the next managing partner will be. Without any rancor. We don't do second term or whatever, tenure elongation. When it's time, it is time. When it's time to resign, you retire. One thing too, please make sure you have a partnership agreement. It's very, very, very important. When you have partner, make sure you draft a very good partnership agreement. Lack of partnership agreement is what is carrying people from going to partnership. Draft a very good agreement. When you retire, something must be payable to you on a monthly basis. You can't set up a business and you go hungry. You know, we need the money at retirement. It's old age, you need money, not now. Yes, you have to look after old age. I want to rely on your children. With the way things are now, you should be very happy if your children can even, sustain themselves, let alone taking your own responsibility. That will become a liability. So if you have a firm that until death, something must be paid to you, why are you afraid to go into partnership and retire? So, my dear brother and sister, talk to a friend, come into partnership, come together, set up your practice, and run it. The Big Four I'm talking about, they started very small as partners. And today it's Big Four. So talk to your friend. Even in marriages, we have disagreement. So you may have this kind of disagreement with a partner. Wisdom, you get everything sorted out. So please join a friend, run a very good firm, the firm that will grow and become the Big Five.
The tax space is very big and wide. Since the lead presenter has already done justice to the topic, but I'd just like to reiterate some points or things that stand out. So it was talking about, proud to now, we used to have this quote. I don't know if a lot of us have heard of the phrase, ignore tax. Tax practitioners were almost like put to the backside, proud to now. Just the tax is a one line and just go. But now you can't ignore tax because tax is now becoming like one of the major things in source of revenue in Nigeria. If you look at what the FRS is budgeting, their budget for this year is 25 trillion. So that means there's a lot of work for tax practitioners. There's a lot of revenue to be made. And even for us as Big Four, you realize that, yes, it's not as easy as people think. They just think the Big Four, once we get there, we get the business or market. No. So there are things also that we do to put things in place. And one of the key things, right, for any business to thrive or survive, you have to know what you are doing. So for clients, for even the multinationals you work for, the local clients you work for, what every client is looking out for is what? Value. They want to engage tax practitioners that will add value to them. So what I would say is, as they are going to start your own practice, you need to know your owners, know what the tax practice is all about. Now we know we have the reform bill coming up. We need to take time because even for us as Big Four, there's a lot of learning. We've been doing what we call our technical sessions for the past months, and it might go up to 3-4 months for us to, divulge what is really in the bill, understand it. Because if you don't understand what is in the law, what is in the bill, how do you want to advise your clients? So you need to prioritize learning. I would like to just read a quote from Alvin Toffler. The illiterate of the 21st century will not be those who cannot read and write, but those who cannot learn, unlearn, and relearn. So for us as tax practitioners with this ongoing reform bill, please and please, don't have that, I already know what is in the tax law, proud to now. No, you need to know what is going on, what is in the reform bill. You need to keep yourself abreast. Now it has passed them, I think, the second reading. So it might, hopefully before the end of the year, it will see the light of the day. So you don't want to be that tax practitioner. As you say, I'm the managing partner of the firm, and you don't even know what is in the reform bill. You want to keep relying on your staff. So it's like everybody is going back to the drawing board. So we need to go back, learn, and continue to learn. Learning is very, very key. You don't want to be a managing partner or a partner in any firm and your staff knows more than you. But that doesn't mean you should also not pay attention or listen to what they have to offer. So one other key thing I would like us to take out from this place is that continuous training is very key. So for us in the Big Four, we have specialized knowledge. Like for instance, I cover the consumer space. But for small firms coming up, you may not have that privilege or opportunity to be able to specialize in those because they are just coming up. But what I will say is that I know the Institute has a lot of training coming up, but please try and join those training. And even in-house, you can engage yourself, engage your staff, have what we call like technical sessions weekly. What is going on currently, what is in the reform, discuss. You'll be surprised that if you want to do like I know it all approach, you won't survive or thrive. So please try to have those technical engagements with your staff so that everybody is kept abreast. Like what he said, there was a time, I think that was 3-4 years ago, where we had a lot of our staff, leave, exit. They were going Japa syndrome. And just imagine that you have not given every staff the opportunity, you've not trained them equally. That means you'll be left with what? People that, if you just want to train all the high flyers, because there's that tendency that if you have people that, this person is doing so well in your firm, and all your focus is on those staff, if they leave tomorrow, what happens to the rest? So one thing I would say is train everybody, give everybody that equal opportunity so that your weakest link, right, is you're as good as your weakest link, so that every staff has that right training. Don't try to prioritize one staff over the other. That your superstar staff may leave before you know, right? So please, let's try to train staff equally. One key thing also from what he has said is, we call it in our own firm, the 4I review. Like I said, what clients are paying for is the value they are getting. They are not paying you because you're a tax practitioner. They are not paying you because you've gone through the CN induction program or you have your practicing license. What they are paying you for is value. If clients are not getting value from you, they would leave you. So one, which then boils down to your quality of work. Now, from you may not know it all as small firms, but like what the lead presenter said, you can call your colleague in the other firm. Okay, I have this project. Let's partner. Let's go. Let's do it together. For us, because we are a bigger firm, we have different people from different background, lawyers, accountants, people that read all sort of things. And it will interest you that when, even at that, if you do your work, as a partner, we still have what we call, like another partner has to look at what you've done, just to be sure that anything that goes out has gone through the 4I review. So we have maybe the staff starting the work, you have the senior or the manager looking at the work, the partner, then we have what we call our engagement quality assurance review. Because anything that goes out, it is your brand. If you give an opinion or you do a work that is not good, they will say, oh, let's say it's Ronke & Co. It's Ronke & Co brand. And as they are growing, you want to become, yes, the next big five, but your brand, your quality of work is very, very key. So please, even if you've done the work as the managing partner, if you think that, okay, there's even someone, might be your senior manager that you know you can trust, can you take a second look at this work that I've done before it goes out, right? So that your quality is protected and your brand is protected. So for the Big Four, what has helped, so far today is that we don't joke with our brand. Now, even if a client is paying you, so we have different categories of clients. Of course, not all our clients are multinationals, right? We have different categories of clients, but all clients are treated with equality, fairness. So it's not because they are getting so much from this client that you now say, oh, these other clients, I'm not going to give that same level of attention to details. We don't do that. So whatever job you've taken, if you decided that you want to price yourself low, please, you must still give that level of quality of work. Then in terms of charging of fees I spoke about, right, even for us as Big Four, we've evolved over time. The market is not easy. So there was a time, I remember when I joined the firm, right, for some certain type of service, the fee we are charging now is almost, it has evolved over time. And what we formed to realize is that, yes, people will tell you, this other firm is charging this low, because even among the Big Four, there's still rivalry. There are some people that they lowball, and you wonder that what's happening here. Sometimes maybe you have quoted, say, for instance, 10 million or 15 million. They'll tell you another firm is quoting 3 million. But sometimes you with the 15 million will get the job because of the value and the quality. So please don't be scared to charge appropriate fee, but we have part of our own ethics is that you must charge fair pricing. Don't say because I'm just starting and let me charge 200,000, 250,000, and you know that cannot even cover the cost of your engagement. So I will quickly talk about how we charge, right? So if there are going to be 4 people involved on the engagement, there are what we call charge out rates. So they are attached to each level of the each level of staff personnel that will work on the engagement, so that it will give us an idea of, okay, this engagement, how many hours is it going to take us to run this engagement? That would help us determine the price. And one thing that thing does again is that if you've gone on the engagement and it's going beyond the time you've envisaged you want to spend, it enables us to go back to our clients to say that, yes, we've budgeted this fee. We've told you, let's say, charge this fee at 5 million. But based on this engagement, we can see that we spent over 5 million and we engage them and even recover some of the costs. But before they can even give you part of those costs you want to recover, they must have seen value. I can tell you that proud to now, maybe some engagements we charge, say X amount, now we are able to charge times 10 of the amount because we now understand that this is the value we are adding to this client. So I think value addition is very, very key. Yes, and when clients can see value in what you are offering to them, what works in this practice, whether big four, small firms, and everything, is referral. Referral goes a long way. So if you don't give value to clients, or maybe because you've done this particular engagement, the client is not satisfied, it's a small world. And the client tells the next person, oh, I don't like what Ronke and Co has done, they didn't give me value for. And before you know, you are losing potential clients. So for us, every single client we have is a potential client that can give us more jobs. And we've gotten like referrals from clients. So please and please, always do your job like that job is your only job. So for us, we make clients feel special as if, oh, we can have deadlines. Every client, maybe the same deadline, but every client is made to feel special as if you are the only client that we have. So that's the way you need to treat your client, as if that's the only client you have. Yeah, so I would just like to maybe talk about measures. If you want to evolve, right, and you want to become the next big five, nothing stops you from coming the next big five. Try to write your name in the footprints of taxation. But one key thing you can also do, if you merge as firms, right? If you see that you have another firm that maybe is very good in terms of mergers and acquisition, or you have a firm that is very good in terms of maybe tax advisory, you can look at the compatibility. Does this person have the same values like you, so that you could merge and come together? Because if you merge and come together, it gives you a stronger brand, a stronger firm. And like everybody, you don't know it all. You can't know all aspects of taxation. There will be something you are very good at or something you are known for. So if this other firm, you feel, yes, you can combine with them, please do that. It also helps your financial stability. For us as the Big Four, we take our engagement procedures very key. So like that KYC that he mentioned, we want to work with people of integrity. We say we are people of integrity. We want to work with people of integrity. So we do proper background check on our clients. We want to be sure you are not involved in any money scandal or anything that can dent our image, because if you work for a client that has integrity issue, your other clients that you're also taking on board, right, they might not want to associate with you. So for us, we take that very key. Your KYC has to be taken very key. Then for your engagement take on, one key thing you also need to agree on when you take on those engagements, even after signing your letter of engagement, please try and document your understanding with the client. So you might have an engagement that has, let's say, tax compliance, tax advisory, merger and acquisition, anything. But for each phase as you're going on, just recheck with the client that this is our understanding of what you want us to do. And while you're doing that, he mentioned something about documentation, very, very key. We've had an instance in practice where, the clients came back and said, we did an engagement, this is our understanding, we document everything. After we are finished, we document the memo. This is what you gave us to review. These are the documents you gave us to review. This is the outcome of our review. We give everything, we document, and it's well detailed. So if you come back in the next 5 years, yes, we gave you this advice, but it was premised on A, B, C, D that you gave us. And that's why we have our protection clause. Because remember that tax keeps evolving. So if you've advised a client 5 years ago, and the client wants to use that same advice now, and things have changed, let's take the withholding tax, and the client said, no, you advised me 5 years ago. We had such clients that when they came into the country, I think that was about 7 years, we advised them, and they didn't follow through. They now came back, that was last year, and said, oh, but you advised us. Unfortunately, and because we have that practice, we keep all our advice, we keep our documents proper. Okay, yes, we advised you, but based on what you explained, that this is what you are coming into the country to do, A, B, C, D. So imagine that wasn't put in place at that point in time that we took up that engagement. They wanted to tell us that, oh, we would pay this additional charge, but the only thing that protected us was because we documented our understanding and the advice we gave him at that point in time. And when you're finalizing engagements and everything, please you have to do proper wrap-up. Don't just leave a job in between. We've had instances where, and we try to put some of those clauses, maybe we're giving you an advice, we follow up with you, we need to finalize this maybe in the next 1 month because things might change and you don't come back. We try to protect ourselves. If you don't come back, we will send our final report to you. And one key thing, maybe that will be my final note, is that you need to invest in technology. Now, this is the era of technology. You can't say, I don't want to invest in technology. The area we are getting to, you don't want client information being leaked out. So we invest a lot in like having technology. Part of your rules also, make sure that people don't just leave files just carelessly. We've had an instance, we did a merger and acquisition deal for a client, and the information got out there. Fortunately for us, we have our procedures well documented. We don't, in fact, if you're working on your laptop, you can't leave it just open anywhere. We set all those rules. So please also educate your staff. Make sure you have your risk training for them on the importance of keeping clients' information private. And when you are going to do another work, you see people, that has to do with eye for detail. They are going to present to, let's say, Cadbury. They've done that same thing for maybe Unilever. They will not remember to remove some information. So please, as professionals, let's be detailed in whatever we do. That's just my charge.
The environment is evolving. You have the FRC, Financial Reporting Council. The FRC will also regulate what you do. So bear it in mind. If you do anything that is outside the ethical provisions of our institute, FRC will knock at your door. You have obligations to FRC. When you are engaging, make sure that the person you are engaging is not someone that will bring FRC to your door and say, this man has not acted well. Like I said, I've listened to my brother's presentation severally, and at every point, it takes me back to go and look at so many things again. So, and he said something about someone signing an opinion page with CITN, stamping it with CITNC. The problem is, two things could have happened. It's possible the person that stamped it is not the person that has the license or the seal. So what do you do? Guide your license as if it's one part of your leg. Anywhere you are keeping it, make sure it is well protected. And now your name is on anywhere they place your seal. Whether they use forensic machine to check whether your fingerprint was on that paper or not, the fact that your seal is there is a representation that you performed and executed that document. So you have to be careful. Another thing you also need to take cognizance of, you also need to look at how do you manage information. Please, it's very key. And in this sense, you must look at conflict of interest. When they say conflict of interest, I'll tell you one specific area. Some of us will be practitioners. Some of us are already administrators. Now, you know there are on two sides of the divide. You may be consulting for a taxpayer and have another person seeking for your service as a consultant. You know all this TAMA and all those kind of consulting that happens in our tax space. There will be conflict of interest if you are consulting for somebody as a payee TAMA or agent, and you're also conducting tax computation filings for a client in that same state. That's conflict of interest. You may start it at one point before the other will come. As a professional with integrity, money is not everything. If it's going to create conflict of interest, please reject it. As recent, we had situation that required our participation, and I told my managing partner, I said, no, this one, I've looked at it on both sides. We dissected it and we said, though in the present, it doesn't appear that there will be conflict of interest. But because of this, because of that, because of this, because of that, we cannot participate in this proposal and bid. And that's why you see most of the time, I'm not sure you will see us doing TAMA or doing all those, because most of our clients, there are many and they are in the private sector. If you are in Lagos, for instance, who do you want to consult for Lagos State? When all your clients are in Lagos, when they say come for a meeting, where will you sit? Is it with your client, or you go and stay with Lagos State? So, but that does not mean you must not advise your clients to conform with the laws. Your best bet, if you want to be a friend of Lagos State Internal Revenue, is to advise your client well. If you have good advice for your clients, help them implement those advice. And that is the value adding that we put in our services. Sometimes you will tell you, this is what we'll do, but in the course of it, if you are not getting it right, we go out of our way. That's value added service. Not everything you charge Naira for. If the client sees, if he's a perceptive client, if he sees that you are adding more than what you had initially wanted to do without going outside the purview of your engagement, then he will be more inclined when he's in need to say, this man will be my first port of. It has happened severally. Your engagement letter, please, it is very, very key. But there are two aspects of engagement. Sometimes you will not be in the position to give out an engagement letter. It's not in all occasions that you are privileged to give out a, but even when an award letter is given, because every industry has their own structure and how they operate, and even entities, groups have the way they operate. But in all cases, do not forget that the ingredients of a properly drafted engagement letter should be in whatever letter that binds your relationship with a client. And one of it is that there must be an exclusion clause. You know, you've heard comments of they say, you are supposed to do this, you are supposed to. In our engagement letter, you always see it. When we have detailed all what we want to do for you, there's always excluded services. Excluded services specifies all the, so you cannot at any time come back and say you are supposed to do this. From the engagement letter, you have seen it, where it starts and when it ends. Another thing is that you must also be very careful so that your engagement letter has a timeline, a time limit, a time frame. It may be for 1 year, it may be for 2 years. There must always be basis for continuation and renewal. Always take it in your stride so that you don't get to a point they say this, like my friend was saying, that they came, I think 5 years or so later, to say you were supposed to be, what you advised us at this point is not what is happening now. Your engagement letters must also state the parties that they are for. For instance, if you are writing a letter of advice to a client, please, if that client, if your advice does not show limitation of that advice to which they apply, there are third parties. You know, there are companies that have more than 16 subsidiaries. If you are giving to the, let me say they have a holding company, for instance. If you are giving an advice to a holding company, the possibility that the subsidiary does not fall within the same structure and activities of the holding company is there. And if you are engaged to give the holding company that advice, it does not relate to other subsidiaries. So you must make sure that if they go and use that same advice for their subsidiary and something happens, you will be held culpable. So you must put that clause that this advice is for you, for this purpose, and to achieve this goal. You must also look at the evolving nature of our tax system. You have heard of Finance Act 2019, 2020, 2021. You've heard it is evolving. As the evolution takes place, please read, and read. 2 days ago, I got a call from a client on an assignment that he was on. It's not even a call that I have billed for. But I told him I will get back, like Aurora said, yeah, I will get back to him. I went back to the tax law from 2019. This brain is not God's brain, it's human brain. There is tendency for you to misconstruct a knowledge you had 10 years ago or 2 years ago, even 3 months ago. So you must go back and make sure that in the particulars of that knowledge, it is what you have at the top of your mind that is being reflected in the enabling documents. So you must go and review. Don't say, I am managing partner, and because of that, everything you pass it to your colleague, you pass it to to your staff. The staff will do one day, and you will be the one that they will put the name there. You must monitor everything. In my firm, for instance, we have a partner in charge of quality control. So anything that passes on, it must pass through our research department that will look at it. Okay, is this in context, in form, in even in communication? Does it meet the standard? And the partner in charge of quality control must also look at it to say, okay, this thing, yes, can we send it out? If we send it out, and how will you? So there are a lot of things you need to learn, but of all, please, always remember, train, retrain. Overtraining is not a crime. It's undertraining that is a crime. Overlearning is not a crime. It's underlearning that is a crime. When you do this, my earnest wish is that when next we see, and I see you somewhere, I see you in the tax office arguing your case on behalf of your client, I'll say, yeah, this is the guy. I saw him. He was on his front seat. That will be your testimony.